welcome to today's episode of Heard and Seen Around. I am Rajesh Karipurath. This is my take on macroeconomic and geoeconomic data points, which I find interesting. I hope you enjoy watching it as much as I enjoyed curating it. Cheers.
A classic is a book which people praise, but no one reads. Few things are more irritating than when someone who is wrong is also very effective in making his point. The difference between a miracle and a fact is exactly the difference between a mermaid and a seal. Necessity is the mother of taking chances. Facts are stubborn things, but statistics are more pliable.
India's IPO market just flipped the script. For years, most public issues were basically promoter exit parties. OFSs dominated every cycle, but now, fresh capital is finally overtaking OFS, hitting 54% in FY26 so far. That's founders saying, okay fine, we'll stop selling, let's actually build. This shift matters. More fresh capital means IPOs are becoming genuine growth stories, funding expansion, capex and new products. Not just glamorous liquidation events. It hints at stronger balance sheets, more skin in the game, and promoters who want to scale, not sail off into the sunset. Here are the top performing S&P 500 stocks of the last 30 years. And surprise, surprise, the winner isn't a tech giant, a retailer, or even a chip maker. It's Monster Beverages. Yes, the energy drink company quietly turned $10,000 into over $81 million. Caffeine bet, cloud computing, let that sink in. Nvidia, Amazon, Axon, Netflix, Apple, all the usual superheroes show up with insane returns, but none of them caught Monster's sugar-fueled rocket ride. What this list really is, the biggest winners didn't just ride trends, they created them. Chips, streaming, e-commerce, biotech, automation, and apparently beverages that make teenagers vibrate. India's fintech scene looks less like an industry and more like a full-blown unicorn stampede. In a decade, we went from passbooks and long queues to UPI taps, instant loans, robo-investing, and credit scores built before your first job. Payment giants like PhonePe, Razorpay, Paytm turned India into the world's real-time payments capital. Lenders like CreditBee, Fibe, IndieFi made credit as easy as ordering a tea. And Grow Zerodha upstocks turned investing into a national hobby, right behind cricket and giving budget advice nobody asked for. With 25 plus unicorns, dozens of soonicorns, and a herd of minicons warming up, this wave isn't slowing. The next gold mine, rural fintech, embedded finance, SME credit, and compliance AI. India's data center industry is having its main character moment. Fueled by new data laws and an AI explosion, over $50 billion of investments is pouring in from hyperscalers and Indian giants, pushing capacity towards 9 gigawatts. For a country once seen as an underrated market, India is suddenly one of the world's hottest data center destinations. Why? Cheap power, fast construction, and an engineering talent pool that basically runs on caffeine and innovation. Google, Adani, Airtel, AWS, Microsoft, digital connection, everybody wants a slice. And here's a kicker. India's data center capacity is expected to grow 17% annually, the fastest globally, even though North America is still the big shark with 38 gigawatts today and 84 gigawatts by 2030. October's PEVC numbers look upbeat at first glance. Investment value up 9% year on year. But here's the twist. Without that one giant $1 billion deal into Sanman Capital, this chart would have looked a lot more like, Monday morning. Deal volume actually fell 9% from last year and 30% from September. Fewer deals but bigger checks. The classic slow month rescued by one billionaire with a pen. Private investment in public equity alone jumped tenfold to $2.1 billion, and 9 mega deals made up 70% of all October investments. The big money went into financial services, e-commerce, and tech because apparently those three sectors now have a lifeline subscription to investor attention. India's investment announcements just hit a decade high with over 15 trillion rupees of investments in new projects announced in the first half of FY26 alone. That's not just a bump, that's the investment cycle waking up, stretching and saying, all right, let's build. What's powering this surge? The private sector, finally back in the game, is driving the tallest bars on the chart. After years of government-led capex carrying the load, corporate India seems ready to loosen the purse strings and start expanding again. Global energy demand has exploded, up nearly 60% since 2000. And China alone is responsible for more than half that growth. If energy were a buffet, China has definitely been going back for seconds and thirds. But here's where the plot twists. The next big drivers of global energy demand won't be China or the West, it'll be India and Southeast Asia. As incomes rise, industries scale, and millions join the middle class, energy consumption follows like a loyal pet. All major fuels grew over this period: coal, oil, gas, renewables. Because the world didn't just meet its demand with one source, it simply turned everything on. India's services trade just refuses to slow down. Exports hit $35 billion in October, pushing the country's annual services surplus to a massive $202 billion. That's not just healthy, that's carry the whole current account on my back energy. And here's the real kicker. That surplus is now inching closer to covering India's goods trade deficit of roughly $280 billion. In simple terms, software, consulting, design, global capability centers, all the invisible stuff, is quietly paying the bills for all the oil, electronics, and gold we keep importing. Services have become India's most reliable economic shock absorber. While goods fluctuate with global cycles, services just hum along like a well-oiled export machine.